All right, welcome to the deep dive. You've handed us a stack of sources, things like financial reports and investor updates, and our job is to dive in, extract the most important nuggets, and, well, give you that shortcut to being genuinely well-informed.
Exactly. We're here to pull out the surprising bits, the key insights, so, you don't have to wade through all the jargon yourself.
Think of us as your guides. We'll walk through the material you provided, highlight what really stands out.
And help connect the dots so you get the bigger picture fast.
And today we're doing a deep dive into Bangkok Dusit Medical Services, BDMS. We've got their Q1 2025 interim financials and the 2024 investor relations update right here.
Yeah, our mission really is to cut through all the dense numbers and, the corporate speak in these documents.
Right. We want to understand BDMS's recent performance, their strategic moves, and just get a real feel for the company's health, its direction, as of early 2025. Based purely on what you've given us.
Okay, so where do we start? Let's kick off with the big picture. Who exactly is BDMS? What's their reputation like?
Well, looking at these sources, they're clearly positioned as the largest private healthcare provider in Thailand. It's a massive operation we're talking about.
Oh, massive.
A network of 58 hospitals.
58. Wow, that's substantial. And under different names, I see.
Yeah, 6 key brands are listed here. Bangkok Hospital Group, Seventive Edge, B&H, Phayatai, Palo Hospital Group, and Royal Hospital Group. So pretty diversified across the country.
And it's not just hospitals either, is it?
No, that's right. The documents mention they're also into wellness clinics and other medical support stuff, labs, pharma production, sales, pharmacies.
And even hotels, like that Movenpick BDMS Wellness Resort. Interesting. Building a whole healthcare ecosystem, it seems.
Yeah. And what really jumps out looking at these first pages are some, well, pretty significant awards or recognitions they've gotten recently.
Oh, yeah, that DJSI thing. This is pretty fascinating. The investor update really highlights the ranking by the Dow Jones Sustainability Indices.
Wow.
For 2024, BDMS ranked #1 globally in medical services. That's for both the DJSI World and Emerging Markets Indices.
Globally. Number 1, in medical services sustainability. That's huge.
It really is. And they mention why, too. Highest scores in governance and social dimensions.
Okay.
Apparently, they're the first healthcare organization from Thailand and actually from Asia to hit that global #1 spot in this category.
Wow. Okay. And what about on the financial credibility side? Anything there?
Yep, Tree IS rating. They recently affirmed BDMS's company rating and their senior unsecured debenture ratings at AA+, and the outlook is stable.
AA+ is very strong. Did Tria say why?
Yeah, they cited the leadership status, that huge hospital network we just talked about, their strong operating performance, and just a really robust financial position. Solid reasons.
So putting this together for you, the listener,
Mm-hmm.
why does this background matter before we get into the weeds of the financials?
Well, it's crucial context, isn't it? It sets the stage. You're not just looking at numbers from any old company.
Right.
You're looking at a major player, an industry leader, and one that has strong independent validation. Not just for financial strength, but also for sustainability and governance. It means the numbers we're about to dig into come from a company that's seen as pretty credible and operating from a strong base.
Absolutely. Gives the performance figures a lot more weight. Okay, so stepping back from that big picture, let's look at the full year before this latest quarter 2024. The investor update summarizes it. How did they do overall?
Well, 2024 looks like it was a strong year for BDMS. Their total operating revenue hit 109,351 million baht,
Okay.
which was a solid 7% increase compared to 2023.
7% growth.
Yeah.
And digging into where that actually came from.
The core, obviously, is hospital revenue. That came in at 103,675 million baht, also up 7%.
And what drove that hospital growth?
It seems pretty broad-based, actually. Growth from both Thai patients, who were up 5%, and interestingly, foreign patients grew even faster, up 11%.
11% from foreign patients. That's quite a jump. Does it mention which countries were driving that?
It does, yeah. The update specifically calls out some really impressive growth from Qatar, up 39%,
Wow.
China up 31%, and the U.S. up 25%. So, they seem to be successfully attracting patients from quite different international markets.
And did that strong foreign growth shift the overall mix much? Thai versus foreign revenue?
Just slightly. It moved from 73% Thai, 27% foreign in 2023
Uh-huh.
to 72% Thai, 28% foreign in 2024. So yeah, foreign patients are becoming a slightly bigger slice of the pie.
Okay. And within Thailand itself, was the growth concentrated in Bangkok or more spread out?
It looks pretty spread out. Hospitals in Bangkok and the nearby areas saw 5% growth, but the hospitals outside those areas grew even faster at 9%.
Interesting. So strength across the board, really.
Yeah, indicates healthy performance across their whole regional footprint.
And patient types, outpatient versus inpatient.
Outpatient revenue grew faster, actually, up 9% compared to inpatient revenue, which grew 5%. Although, interestingly, the overall bed occupancy rate across the network dipped slightly. It went from 69% in 2023 down to 67% in 2024.
Huh. Revenue up, occupancy slightly down. Suggests maybe higher revenue per visit or perhaps shorter stays?
Could be. Or maybe a shift in the types of services. Anyway, their non-hospital revenue streams also did well.
Like the sales of goods?
Yeah, sales of goods and food revenue was up 11% to 4,192 million baht. The documents say this was mainly driven by their medical supply companies, Sahapat Medical, and the Save Drug Center pharmacy chain.
Makes sense.
And the other revenue category had a big jump, 18% increase to 1,484 million baht. Apparently, that was largely thanks to the Movenpick BDMS wellness resort.
Okay, so strong, diverse revenue growth across the board. What about the cost side in 2024? Did expenses keep pace?
Pretty much. Total operating expenses, and this includes depreciation, they increased by 7% to 88,899 million baht, right in line with revenue growth.
And the drivers for that?
Well, the documents explain it was mainly higher medical fees and costs for drugs and supplies, which you'd expect with more business.
Staff costs also went up for both medical and support staff. And then things like marketing, repairs, maintenance, other admin costs, all up.
Were there any areas where they managed costs particularly well or even saw decreases?
Yes, actually, finance costs, they dropped significantly by 21%, down to 433 million baht.
21%, that's a big drop. Why was that?
The source attributes it to some debentures maturing and paying down long-term bank loans. So less debt meant less interest expense. A substantial saving there.
Definitely helps the bottom line. And taxes, how did that play out?
Income tax expense only increased by 1%, which is, much less than their profit before tax grew.
So a lower effective tax rate, basically.
Exactly. And it seems this was partly thanks to tax perks they got from Thailand's Board of Investment, the BOI.
Ah, BOI privileges.
Yeah, for projects like their digital core transformation and some energy-saving initiatives, those tax breaks helped keep the overall tax bill lower than it might have been. Got it. So revenue up, costs generally in line, but finance costs way down, plus some tax benefits. How did that all shake out for profitability in 2024?
Very nicely, it seems. EBITDA, that's earnings before interest, taxes, depreciation, and amortization.
Right, the core operational profit measure.
Exactly. That was 26,584 million baht, up 7%. And their EBITDA margin held steady at 24.3%.
Okay.
But net profit, the actual bottom line, that did even better. It reached 15,987 million baht, which is an 11% increase.
So profit grew faster than revenue.
Yep, which pushed their net profit margin up from 14.1% in 2023 to 14.6% in 2024.
Nice improvement. And earnings per share.
EPS followed suit, up 11% to 1.01 baht per share.
Okay, so summing up 2024 just based on these documents you were given.
Looks like BDMS had a really strong year. Solid revenue growth, broad-based across patient types and locations. They managed operating costs effectively, got a big boost from lower finance costs, and benefited from those tax privileges.
And it all flowed through to better margins and higher EPS.
Precisely. A good year for them.
Excellent summary. Now, let's zoom into the very latest data we have, this Q1 2025 interim report. So the 3 months ending March 31st. And we should remember, these figures are reviewed, but not fully audited yet.
Right, so looking at the consolidated figures, comparing Q1 this year to Q1 last year, the growth trend seems to be continuing.
Okay.
Total revenue in Q1 2025 was 28,462 million baht. That's up from 26,939 million baht in Q1 2024. So it's still growing nicely.
And expenses, did they track that revenue growth again?
Yes, pretty much. Operating expenses, which they bundle as cost of healthcare and sales, plus admin costs, were 22,839 million baht. That's up from 21,629 million baht in Q1 last year. So costs moving broadly in line again.
Which should mean profit continued to grow as well.
Exactly. Profit before tax rose to 5,476 million baht in Q1 25, up from 5,259 million the year before.
Yep.
And net profit for the period also showed healthy growth. It hit 4,495 million baht compared to 4,217 million baht in Q1 2024.
And the earnings per share for the quarter, basic EPS.
That came in at 0.27 baht for Q1 2025, just a slight increase from 0.26 baht in Q1 2024.
Okay, still positive. Now, beyond the P&L, let's glance at the balance sheet. As of March 31st, 2025, compared to the end of last year, December 31st, 2024, what's that picture look like?
The balance sheet actually looks quite strong, getting stronger maybe.
How so?
Well, total assets increased, went from 151,514 million baht at year-end to 154,211 million baht by March 31st.
Okay.
And total liabilities actually decreased, down from 47,588 million baht to 45,710 million baht.
Oh, interesting. Assets up, liabilities down.
Yeah, which means mathematically total equity increased quite healthily from 103,927 million baht up to 108,501 million baht.
Right. Growing assets while shrinking liabilities and therefore boosting equity, that's definitely a positive signal for financial health. What about cash flow for Q1 25? How did that compare to Q1 24?
Cash flow from operating activity stayed strong. It was 7,767 million baht this Q1 versus 7,565 million last year, so operations are still generating good cash. However, net cash used in investing activities went up quite a bit. It shows an outflow of 3,449 million baht this quarter, compared to just 2,388 million outflow last year.
So more cash going out for investments. What about financing activities?
Similar story there. Net cash used in financing activities also saw a bigger outflow this quarter, 2,631 million baht outflow compared to 1,700 million outflow in Q1 2024.
Okay, so operations generating solid cash, but significantly more cash went out the door for investing and financing activities this Q1 compared to the start of last year. What's the sort of headline takeaway from Q1 2025 then, before we maybe dig into the notes?
Well, based on these documents, it looks like the business kept its growth momentum going into 2025. Solid increases in revenue and profit compared to Q1 last year.
Right.
And the balance sheet looks like it's strengthening. Assets up, liabilities down, equity up.
With those cash flow changes.
Yeah, that increase in cash outflow from investing and especially financing, that's definitely something we need to look into the notes for to understand why. Where did that money go?
Perfect segue. Because, often the real story, those crucial little details, they're buried in the notes to the financial statements. Let's have a peek in there.
Absolutely. The notes are where you find the color, like trade receivables. The notes break down how much is owed to them, who owes it, related versus unrelated parties. And importantly, the aging profile, how much is current versus overdue as of March 31st.
Useful detail. What about transactions within the BDMS group? Related party stuff.
Yeah, the notes list the types of significant transactions, things like revenue from services between group companies, consulting fees, interest paid or received, dividends, costs of goods swapped around.
Standard stuff for a large group. Anything particularly eye-catching there for Q1?
Well, one thing that stood out, looking just at the parent company's figures, was the movement in intercompany loans, short-term loans from its subsidiaries. That jumped quite a bit.
Jumped how much?
From about 21.3 billion baht at the end of December 24, up to nearly 24.8 billion baht by the end of March 25.
So the parent company borrowed an extra 3.5 billion baht from its subsidiaries in just 3 months.
Looks like it, yeah. At the same time, short-term loans to subsidiaries also increased, but by a much smaller amount.
That's a big shift in cash from the operating companies to the parent. Any idea why?
The notes don't explicitly say why. It could be the parent company pooling cash centrally, maybe for an upcoming investment or debt repayment or just internal treasury management, but it definitely shows significant internal cash movement.
Fascinating. Okay. Did you spot any specific external investments mentioned in the Q1 notes?
Yes, there was one specific item. A decision by one of their subsidiaries, Royal Bangkok Healthcare Co., Ltd.
Yeah, okay.
They decided to invest approximately 60 million baht to acquire a 17% stake in a company called Genopeutic Bio Co., Ltd.
Genopeutic Bio, that sounds like genetics.
Yeah.
Biotech.
Yeah, it certainly suggests that. Investing in a company with a name like that looks like a strategic move, doesn't it? Potentially into a new, maybe cutting-edge area for BDMS.
Absolutely. A 17% stake isn't controlling, but it's significant. When did they make that investment?
Well, the decision was noted in Q1. Apparently, part of the payment was actually made after the quarter ended in Q2 2025, but it's flagged in this Q1 report.
So it signals maybe an interest in diversifying or getting involved in areas like biotech or genomics. Seems to fit with their focus on medical excellence.
It does seem to align, yeah. What about their big physical assets? Hospitals, equipment property, plant equipment, or PP&E?
Yeah, the notes show a net increase there. PP&E went from about 93.8 billion baht at year-end to 94.3 billion by March 31st.
So still investing in their facilities.
Looks like it. The notes actually specify additions to PP&E, totaling nearly 2.4 billion baht in Q1 alone, so continued capital spending. Right-of-use assets, mostly leases, saw a small net decrease.
Okay, now let's circle back to that cash flow statement. The larger outflow in financing activities in Q1. Did the debt notes explain that?
Yes, they did. And this is a key detail. Remember, the balance sheet showed short-term bank loans dropping from 2,500 million baht down to zero in Q1.
Right.
Well, the notes clarify exactly why. The company fully repaid a 2,500 million baht promissory note facility in January 2025.
Ah.
So that big 2.5 billion baht cash outflow under financing activities was them just paying off that specific short-term loan.
Exactly. Mystery solved. And importantly, the notes also mention they still have substantial unused credit lines available.
Oh, how much?
Over 20 billion baht plus another 2 million US dollars. So they paid down some debt, which is good, but they still maintain strong access to liquidity if they need it.
That's prudent management. What about other debt, like long-term loans or bonds?
Long-term loans and debentures seemed relatively stable in Q1 based on the figures shown.
Okay, good to know they have that flexibility. Anything else jump out from the notes? Contingent liabilities.
They mention outstanding bank guarantees, totaling about 626 million baht for the group as of March 31st. But that's noted as being related to normal business operations like performance bonds or utility guarantees. Pretty standard stuff.
Okay. What about compensation for the top brass, directors and management?
Yes, the notes give the total compensation figures for Q1 2025. It was 38.6 million baht for the whole group and 36.9 million for just the parent company.
And what does that cover?
Covers short-term benefits like salary and bonuses, plus post-employment benefits like retirement contributions. There's also a very specific detail mentioned.
Oh.
External directors, so non-executives, can receive up to 3 million baht per year for medical treatment at BDMS network hospitals.
That's quite a specific perk. Interesting. And that tax note you mentioned earlier, something about Pillar 2.
Right. The note confirms the company falls under the scope of those new OECD Pillar 2 global minimum tax rules. It's a big international tax reform. However, based on their current assessment, BDMS states the impact wasn't material for Q1 2025. They're also using a temporary exemption allowed under the rules, which means they don't have to disclose certain deferred tax details related to Pillar 2 just yet.
So it's on their radar, but not biting them financially, at least not significantly in Q1.
Seems to be the case for now. It's something to watch globally, though.
Definitely. And finally, anything on the fair value of their financial instruments, assets and liabilities.
For most things, especially short-term items like cash or receivables or loans with market interest rates, the notes basically say the carrying value on the balance sheet is pretty close to the actual fair market value.
Makes sense.
They also provide the usual fair value hierarchy disclosures for assets they do measure at fair value on an ongoing basis, like certain equity investments or any derivatives they might hold.
Okay. So, yeah, these notes really add a lot of texture, don't they? We learned about those internal funding shifts, that specific investment into Genoputic Bio.
Confirmed they paid off that big chunk of short-term debt, but still have plenty of credit lines open.
And even got those details on executive compensation perks and the latest on international tax rules impacting them.
Absolutely. It moves you way beyond just the headline profit numbers. You start to see the specific actions and the nuances of how they're managing the business financially.
Right. So let's wrap up by looking at some of the more recent strategic happenings and maybe future glimpses, drawing again from that investor update you provided.
Okay. Well, the update does highlight some recent physical expansions. They opened the Phayatai Sriracha 2 hospital back in March 2024, added 113 registered beds to their network there.
Okay, adding capacity. And wasn't there something about cancer treatment mentioned?
Yes, in Phuket. The Phuket Cancer Center, located at Bangkok Hospital, Sirois, started offering outpatient services in October 2024.
And why is that significant?
Well, according to the update, it's the first radiotherapy center in Phuket and actually the whole Andaman region down there. It was set up in collaboration with their specialist cancer hospital in Bangkok, Watanasuth.
Establishing a specialized center like that, the first in the region, that really feels like a strategic move into higher level, more technologically advanced services, doesn't it?
It certainly does, and it aligns perfectly with that strategic focus they keep mentioning, excellence in treatment.
Was there anything significant noted that happened after the Q1 reporting period ended, say in April 2025?
Yes, a key post-reporting event. Their annual general meeting, the AGM, was held on April 10th, 2025.
And what happened there? Dividend news?
Exactly. Shareholders approved the total dividend for the 2024 performance. It came out to 0.75 baht per share.
Okay, and the total payout amount?
That totals a hefty 11,919 million baht. Now, part of that had already been paid out as an interim dividend earlier.
Right.
So the final payment, which was 0.40 baht per share, totaling about 6,357 million baht, that was paid out on April 25th, 2025.
So quite a significant return of cash to shareholders just recently.
Oh, right.
Okay, so putting it all together, they're actively expanding their physical hospital network.
They're investing in specialized high-tech medical services like that Phuket Cancer Center.
They're exploring potential new ventures like that stake in Jetapeutic Bio.
And they're returning a substantial amount of value to shareholders through dividends.
All while, as you said, emphasizing those strategic pillars of modern technology and excellence in treatment.
Seems to be the picture painted by these documents, yes.
Okay, so this deep dive, based just on the sources you provided us, it's shown us BDMS is clearly a major force in Thai healthcare. They've got external validation for sustainability, credit strength.
They delivered really robust financial performance in 2024 with strong, diverse revenue growth and, importantly, improved profitability.
And that positive trend looks like it carried into the first quarter of 2025. Ongoing revenue and profit growth, and a balance sheet that actually looks like it got stronger.
Yeah, and the notes gave us those crucial extra layers, confirming that debt repayment, showing those interesting internal fund movements, flagging that potential biotech investment.
Right. It shows they're definitely not standing still. They're actively expanding, investing in potentially cutting-edge services, managing their finances effectively, and rewarding their shareholders. This deep dive really does take you beyond just the headlines, doesn't it? Straight to the specifics in the numbers and notes that reveal the company's underlying health and strategic direction.
Absolutely. Gives you that properly informed perspective.
So here's maybe a final thought, something for you to mull over. Given BDMS's consistent, strong performance that we've seen, their strategic expansions into these specialized areas like cancer treatment and maybe biotech, and this ongoing focus they stayed on modern tech and medical excellence.
Right.
How might their whole approach to delivering healthcare services continue to evolve in the coming years? And maybe more broadly, what could that kind of evolution, driven by a major player like BDMS, mean for the future of healthcare delivery, not just to the company, but across the entire region? Definitely something to think about.